So, in order for us to understand how liquidity works, we need to go over the basic concept of market structure, right? So, we have three basic types of market structure. We have the consolidating market, we have the bullish trend, we also have the bearish trend. Now, on the bullish trend, it's pretty self-explanatory, right? We are looking at highs being taken over, highs being broken, right? You can see higher high, higher low, higher high, higher low, higher low. So this correction to the downside gave enough momentum for this previous high to be taken out, right? So on a bullish trend, all we are looking to do is to buy. So that is it for the bullish trend. Now the bearish trend is just an inverse of the bullish trend, right? You basically see lower highs, lower low, lower highs, lower low, lower highs, lower low. Now new lows have been created, right? You see this correction to the upside and impulse to the downside, right? So on a bearish trend, all we are looking to do is to sell, right? While for the consolidation market, price does not really have a definite direction, so that is why you need to stay away from consolidating markets, right? It doesn't have any clear direction, so stay away from it. But it also has its own importance, right? That is where liquidity comes in, because these areas right here are liquidity zones. So I'll talk more about that as we go forward, right? So now that we understand the concepts of market structure, let's see how market structure actually plays out in the market, right? Now you can see this trend right here, this trend right up to this point, this is obviously a bullish structure, right? Because we have two break of structure to the upside, right? You can see this bullish impulse, then this correction, then bullish impulse, correction, bullish impulse. You can see this, but an important thing happened at this point. And what happened? Instead of price to come down to this level, then take out this high to continue the trend, what did it do? It came down to this level, took out this low, which signified a change of character, right? So after taking out this low, this break of structure to the downside, we saw that price started creating bearish impulse, right? So it started retracing lower, started creating new lows, right? So this signifies that sellers are back in control. So this basically wraps up the fact that you need to follow the trend every time you're looking to get into the market, right? So having understand how it plays out, let's go to liquidity, right? So what is liquidity? Liquidity basically means money, right? It means market orders. So yeah, as buyers and sellers are exchanging money, that is liquidity, right? Now, liquidity happens on two sides of the market, right? Basic trading education is that this is our resistance zone, right? This is a swing high and swing low, by the way. So this is our resistance zone. This is our support zone, right? This is our support zone. So the basic knowledge we have is that if price should tap into our support zone, we are supposed to buy into resistance, right? So you buy above support, sell below resistance. That's the basic knowledge that we have, right? So if you're someone that's looking to catch this kind of setup, what you would do is you would have your entry at this point, right? You're looking to buy, right? You have your entry at this point, then you target resistance, right? So if you are trying to catch this kind of setup, right, this is basic trading education, and a lot of people trade the basics, right? You'll be surprised at the number of traders that actually still follow the resistance and support trading pattern, right? So the important thing that you need to take note here is their stop losses, right? Their stop losses are situated at the end of below the support level, right? So this stop losses is a lot of orders, a lot of contracts, right? So stop losses are below this support level, right? So let's mark it out, right? So buyers stop losses are down here, right? So same thing goes for resistance level, right? Resistance traders are looking to what? Once price taps into this zone, right, they are looking to sell to this point. Now if you are someone that is looking to sell at this level, you definitely have your stop loss above resistance level, right? So now your stop loss is resting here. It's also a lot of orders, thousands, millions of orders, because they are just traders like us, right? So now let's point it out. We have buyers, buyers SL. Buyers stop losses are resting at this level, right? We have sellers stop losses. They are also resting at this level, right? So now, what do we look out for? This is not enough. This is not enough for. This is not enough liquidity, right? This is not enough liquidity. So what we need to look out for is that where is price headed to, and how do we generate? How does price generate more liquidity, right? So what we look out for is buy stops and sell stops, right? So at this level, we have a lot of traders that are breakout traders, right? We have traders that are breakout traders. So many people do not necessarily trade from this point in price, right? They don't necessarily trade for this point in price. They wait for price to break below this support level, right? So they take their trades from here. So they put sell stops around this zone, right? They put sell stops around this zone. So we have buyer stop losses resting here. Now we have sell stops resting here. So that makes two types of orders resting around here. So we have sell stops. We have sell stops. So we have sell stops, and we have yes, we have sell stops here. Now at the top of the trade here, at the resistance level, right, we have traders that are also looking to break out from this point, right? Once price breaks out of this level, they wait for price to retrace, then they try to buy from here. So we have buy stops resting here as well. So these two levels actually serve as liquidity, right? These are buy stops, right? So these two levels are serve as liquidity, and liquidity is magnets for price, right? So now, having pointed out where liquidity is resting, how do we target it? How do we know where it's going? Now that is where the knowledge of market structure comes in, right? But for us to identify and to also target where price is headed, we need to see these two zones as targets, because you can never really know which one is going to hit first. But having a knowledge of market structure is very important in this case, right? So now price can do two things, right? In order to sweep liquidity, you can come to this point, right? Take out liquidity from this side, do something like this, and target the next liquidity, right? It's either it does this, or you see something like this. So you can come to this zone, take out buy stops and sell orders, do something like this, and take out the liquidity at the support level. So how do you know which one is going to hit first? That is why this entry setup comes to mind, right? So this is a type 1 setup. All my inner circle traders actually know this. If you don't, I'm guessing it's only the ones that are probably new on the group that don't know this yet, right? So how the concept of market structure comes in this is in the sense that you have to identify if sellers or buyers are in control, right? So now in this particular structure, you can see that a lot of lows have been taken out, which signifies that buyers are in control. This is pretty much a bearish movement, right? Sellers are in control, and it pretty much signifies that it's a bearish movement, right? So having identified what the market structure is saying, we need to look out for liquidity, right? So in this case, this is a resistance level at this point. This is a resistance level, right? So this is a resistance level, and there are others. Others are resting above here. A lot of sellers are looking to sell from here. A lot of sellers might not have seen this particular supply zone, right? So a lot of sellers are definitely looking to sell from here, and trust me, price would have taken out their orders. This equal high liquidity, price should have taken it out and tap into this supply zone here and actually retrace from it. So Now, you having this knowledge of liquidity is going to make you carefully wait and spot out liquidity zones so that you are not trapped and you are not used at liquidity instead, right? So now, having understand the concept of market structure, moment you see this particular low being taken out, right? This particular premium zone, this is a premium zone, right? So it was this is a zone where sellers were in control, right? This particular level created the impulse that broke this previous low, so it's a protected level, right? So that signifies that if price should ever and at any point retrace into it, sellers are going to take it down again, right? So after taking out the resistance level, this resistance level, this liquidity level right here, there are a lot of orders resting right here, a lot of sell stops and buy stops, like we said here, they are resting at this level here. So the moment price takes it, taps into the premium zone, definitely going to retrace lower. So that is just it. It's simple as ABC. Now let's go to the trade that we caught on the inner circle last week. This is just basically an example of the setup, right? Now, first thing, like I said, we mark out market structure. Our sellers in control, our buyers in control. Now, from this chart, this is just the 15-minute time frame, 15 minutes time frame. You can spot from here that sellers are actually in control. You can see series of lows being taken out, right? So at this point, first thing I saw was this equal low was taken out by this supply zone. You can see this bearish order block right here. It was taken out, this equal low was taken out by this impulse candle to the downside, which I marked out here, right? The moment I saw it, I marked it out. Now, what's the second thing? Where is liquidity resting in the market? Now, this is liquidity to the downside, right? This is support level, right? This is liquidity resting at the bottom. This is liquidity resting at this resistance level, right? So the moment I saw this, I marked both zones out. Now, having in mind the knowledge of market structure, we are looking to sell, right? So in order for us to target where price is headed to next, I marked out this liquidity zone, expected it to be taken out. So the moment price came into it, you can see. Now, in order for you to spot an equal high liquidity, it doesn't really have to be at the same level. It doesn't have to be side by side or bumper to bumper. No, you don't need that. It can be close, it can be at the same level, or it can be, but not too far away from it, right? So the moment I saw this equal low, I marked it out, and I knew price was going to tap into it. So what did price do? It swept liquidity, tapped into the supply zone, and what did it do? It came back into this other target. This other target is liquidity as well. So you can see that immediately it took out this liquidity. What did it do? It went back again, went back up again, right? So what do you think happened here? A lot of traders, a lot of like I said earlier, a lot of people are looking to sell from here. Sell stops are definitely here, right? So a lot of people are waiting for price to do something like this, right? So they add their stop losses at this level, but what the price do? It has already taken out their orders. They're taking out their sell stops, right? So that was how we gained momentum to create a new bullish move to the upside. Then it retraced again. So liquidity is just like magnets when it comes to price action, and that is one thing you need to always look out for when you are looking to catch a profitable trade. Now, that is all for liquidity for now. If you are looking to learn more about synthetic indices or liquidity and other confluences that I use to trade, make sure you buy the book of synthetic indices that we just released, and also make sure you click the link below this video to sign up for one of our mentorship classes that we are having this month. So I'll see you guys in the next video.